going on, guys? Today I'm going to be bringing you a quick little DD report on Clover Health, ticker sign CLOV. So CLOV is a Medicare Advantage company. Basically means they get paid by the government in these big contracts. And something to know about these Medicare Advantage companies is that they are required to put 80% of the money that they receive from the government towards taking care of their customers, basically, because that's why they're getting the money. And even though they're a business and they're expected to take some profits, they are required to put 80% of the money that they receive towards the people they cover. Some people see this as a problem because it kind of limits their profitability. But what's good about CLOV is that they use the Clover Assistant, which is basically a platform that any doctor that accepts Clover insurance has access to, which will give them the ability to see the patient's previous medical records, as well as from previous visits to that particular doctor, but also to other hospitals that were that also used the Clover Assistant. A big problem with other companies is that there isn't this continuity of care, where let's say that you have like Cigna insurance, for example. You could go to an emergency room visit, and then you could go to your primary care doctor, and the primary care doctor wouldn't know that you went to the emergency room. This is obviously a very big problem for seniors who are covered under the Medicare Advantage and other Medicare plans, because as you get older, the health problems you incur are more severe, and if a doctor is unaware of things like that, of certain visits and why you were there and things like that, that could really hinder the quality of care you're getting, as well as just what is actually being treated. So continuity of care is a big thing that Clover is tackling. It's a big problem with senior health insurance, with all the HIPAA laws and the move to moving medical records online, and Clover is basically offering a solution to that. Other companies have tried this business model, but they failed. I think that's a very important thing to realize. But the reason that they failed, from my understanding, is that because they're a tech company, they're doing the same thing that CLOV did, which is where whenever you use the assistant, you actually get paid to use it. But the problem with other companies is that you're only getting paid to use it if you agreed with the suggested care that other companies that their assistant or whatever they were using suggested. However, Clover pays regardless of if you agree with the Clover Assistant's recommendation. This is important because there's no incentivization for the doctor to go against, or to go with or against what the Clover Assistant says. It's up to their judgment, and in the end, personal judgment is can sometimes be better than computer judgment. I think, especially with healthcare, it's impossible to really get a perfect computer that's able to look at every individual person's health history and tell you exactly what kind of care they need in that moment. But in general, this is just like a good way for doctors to know that they're continuing their care, know that they're providing the best care, and also assist them with everything, all the difficulties of being a healthcare provider, right? So that's kind of what CLOV is and what I think about them. But moving on, so their share prices are down, but I just consider this a dip, and why I've been loading up on shares. Personally, it is my largest position in my portfolio at the moment. I'm very bullish on CLOV. I expect to see a very big swing, but share prices are down a lot because of all these things kind of hitting at once. So they had a short report by Hindenburg released about 5 weeks ago. Today's date is March 10th, 2021. They released it February 4th, I believe. And we'll go look at the charts. You guys will be able to see the dip that came when the Hindenburg short report came out. I recommend you guys go read it, but I also recommend you guys do your research. A lot of the Hindenburg short report seemed to be targeting retail investors, and the fact that they just didn't know things about the company and their business model. The way that they did it was really smart. I won't go into too many details, but they basically just accused them of a lot of things that they couldn't prove nor disprove. They also brought up the fact, or not really the fact, but they basically accused the SPAC owner that merged CLOV publicly. His name's Chamath. Dude is very popular in the SPAC world. He has a very good reputation. He's multi-billionaire. But one thing to know about the Hindenburg short report is that a lot of people kind of think that it was a more of a personal attack on Chamath than it was an actual reporting facts on CLOV and why they believe it's overvalued. One thing they brought up was the DOJ investigation. They claimed that CLOV was under DOJ investigation. In Clover Health's response, which they responded the next day, they said that the DOJ simply requested information, which there's no way to really know why they were requesting information. It could be in relation to an investigation against them. It could be an investigation into some sort of Medicare fraud where they found somebody committing health insurance fraud and the DOJ is investigating that and they need Clover's health because they were doing it through Clover. But it's impossible to really know why the DOJ was requesting information. My assumption is that they can't comment on it because it is an ongoing investigation regardless of who is being investigated. But kind of the real problem, I would say, with the short report was that they accused Clover of a whole bunch of securities and trade violations, which pretty much as soon as the short report was released, before CLOV could even get their response out, the SEC notified them that they were under investigation due to the Hindenburg short report, which meant that they could not comment directly on the allegations. Obviously, not being able to, defend yourself against allegations means the allegations are just up in the air, which creates a lot of doubt, which is why I think we're kind of seeing this sharp sell-off of the stock. On top of that, the SPAC merger was pretty recent. I believe it was in December, if I'm not mistaken. But when we go look at the chart, you'll see the merger cool off, and then on top of both of these things, which are already kind of bad for shareholders, you also get hit with the overall tech cool off. So that's why you see things like Palantir, Mara, a lot of the plays that are kind of popular with investing groups with young people like ours, a lot of the EV plays, things like that, all started cooling off. Growth plays. CLOV is a growth play and it's a tech play, and both those plays kind of got hit hard. So I think that this continued sell-off is part of the overall tech cool-off, which is why I think buying this dip is very, very smart. A lot of people agree that this stock has a $20 end-of-year price target. I expect it to beat that price target personally. I expect shares to be around 25 or 30. Obviously, the Weeble comment section saying 50 to 100, but realistic range would be $20 to $30. And if we go look at the prices right now, shares are at $8.11. Way back in December, they actually broke $18 a little bit. We hit $18.03, and then we kind of had this sell-off right here. So if we read this chart, I think that this is all. This is merger announcement, merger hype. Then we have this cool off, and then we have merger go live. We kind of go up, and then there were some like investor meetings over here and things like that. A whole bunch of people jumped on. We had a little, I think this is called a cup and handle. Haven't really looked too much into chart patterns yet, but then we had this cool off. I think that this was the merger cool off all right here. We had a little bit go up, and then we kind of had some more consolidation right here. So as you guys can see, it was kind of consolidating before all this bad stuff around the $14 mark. This is with SPAC merger. It was at $14, which is why I think that the stock's real value right now is probably around $15. 15 to 16 I think is real value at the moment. But then right here on the 4th, that's when you had the short report released. I think it was actually released the night of the 3rd. and then we had this sell-off. If you go to the daily chart, I want to show you guys something and why I'm still pretty confident on the position. So as you can see here, we had this gap down right here, and then so this was pre-market sell-off due to the short report, and then once market opened, it looks like we held pretty even. So we had the gap down, and then we held even with the short report. We had some continued. It looks like we maybe gapped up a little bit going into the next day. People thought that the short report wasn't really anything, and then we have institution. So this candle right here, to me personally, see how these two volume candles are way higher than everything else? I think that this was institutional buy-in off the fear. I think they saw this drop from 14 all the way down to 12 something, and this was institutions trying to snatch up these cheap shares. Then, we kind of had some consolidation. We're staying in the $12 range, and then we start getting hit with the tech cool off, the growth play cool off, and we go all the way from 12 all the way down to 6, and then we bounce off this 630 super hard, and we're starting to look like we're in a little bit of an uptrend. This could be uptrend, this could be consolidation. Either way, I don't care. $8 a share on this is absolutely beautiful. I did buy the dip right around 803 a couple days ago. Brought my average position down quite a bit. My average position at the moment is right around $11, which means I am in a pretty good position. I think I might add some more shares, try to get my average to 10 or below. But if fair value is $16 and my average position is 10, I'm just waiting for this to go up. I think that once these two things kind of cool off, DOJ and SEC investigation specifically, we're going to see very rapid run up. We may even break the $20 price target when that cools off. People trying to get back into the play all at once because they know the long-term potential of Clover Health, over the next 5-10 years. I'm not really going to speak about where I think this could be in 5-10 years because, obviously nobody knows. Something I will say is that their growth has been slower than expected. The current 2020 results, the last I saw, was actually their 2020 amount of people covered was actually their 2017 goal. So they definitely aren't growing as fast as people thought. But the reason that I think that this is going to start picking up either this year or next year is because their customers are mostly based in New Jersey and I think maybe a couple other New England states up in the Northeast, which means their entire business is consolidated to 3 states tops. And everybody needs health insurance. So it's only a matter of time before more hospitals start accepting Clover insurance and more people start to get covered by Clover as they expand and start to grow out of this just the New England states. Another thing to know is that they do have a Walmart deal where you can go to Walmart and actually buy, or not buy, but be covered under Clover Health, insurance through Walmart. It's kind of weird, but this allows seniors, anybody who qualifies for Medicare Advantage, to go into Walmart and get a plan. I recommend you guys look up the actual details of this deal because when you look at it, it's actually really nice, and you really start to understand how Clover, because they are a tech company, their costs in terms of payroll and other expenses is much lower than other Medicare Advantage and health insurance companies because they don't have to pay as many people, and upkeep just in general isn't that high. And when you think about how 80% of their money has to go towards care, when their costs are low, they're able to put a lot of that money towards really just taking care of these people, which is why I think Clover Health is really primed to take off. Just general things that would help Clove: Biden expanding Medicare, as well as lowering the age for required for Medicare. These are things that Biden has campaigned on and is almost expected to do at some point in his term, which would be huge for Clover Health. The reason that this would be huge is because it would massively increase the number of people that qualify for Medicare Advantage at once, which all these people would be rushing to find Medicare plans. And I think that for people specifically in New Jersey and wherever else Clover is able to cover, whenever or if either Medicare expanding or lowering the age ever happens, you would see a big boom in Clover Health as well as across the whole Medicare and health insurance industry. The other thing is that Medicare Advantage is not the same as Medicare or Medicaid. It is unique. And most of the seniors that use Medicare Advantage are in these northeastern New England states or just East Coast states in general, which is why I'm very bullish on CLOV's location. They are located in New Jersey, a very liberal state, along with a lot of those other New England states. So Medicare Advantage is going to be very easy. Medicare Advantage users are going to be very easy for CLOV to find, specifically in this area as they start to expand out. But I kind of expect Medicare Advantage with Medicare expanding to become more popular, and more people would start to use MA instead of regular Medicaid. The last thing I want to touch on is the fact that CLOV's scalability is truly unlimited. This is because they are a software company, so the more people they get in, they kind of have, I don't want to say flat costs, but much lower costs compared to other people as they expand, which means that their coverage would only get better as they scale. Moving along with the scalability thing, their Clover Assistant is actually artificial intelligence in a way. It looks through, how doctors take care of their patients and react to certain situations. So basically their software is always learning. Every time it's used, it learns a little bit more. So as you have more doctors using this, more people in the system, more data, the Clover Assistant becomes more and more valuable. So that becomes more and more valuable as they continue to scale. So really this is kind of like a parabolic growth situation that we could start seeing with CLOV, which is exactly why I'm buying in now. Because as it starts to scale up, if they start to scale up, if they are successful as I believe that they could be, and once we get all of this BS out of the way with the DOJ and SEC, all this cool-off bullshit out of the way, and you start to see them scale and bring more people in, maybe start expanding outside of New Jersey, you're just going to see an absolute boom with CLOV. That's just what I think. Like I said, other people have tried doing what CLOV has done and have failed. I think that CLOV is different, but I think that people are slow to jump onto CLOV because it's been tried before, because of all this doubt, because of all these other things, and that's why I think that this $8.11 is criminal for this stock. I think it should still be up around the $15 mark. I think that we should have, maybe even start without this DOJ and SEC, without all this cool off. I think that we'd be up here. I think we may even be up into the $16 range. But for us, for me, this is prime. This whole drop right here is absolutely golden for me. I love this stock. I love this position. It's one of my favorites. I think this is going to be one of the biggest swing plays of the year. It may not be the biggest grower. It may not be the fastest grower. But I think that in terms of how much this swings, I think that the swing is going to be absolutely insane. So thank you guys for watching. Definitely let me know what you guys think of Clover Health. If you guys think it's shit, talk to me about the CEO. The CEO is something I didn't talk about. Look into the CEO. Let me know what you think of him. I think he's just somebody who's very passionate and kind of frustrated with a falling stock price for no real reason when they're a very, I don't want to say legitimate company because they haven't proven that, but I think that they have a very good mentality, and I think that they know a lot about what is needed for this company to grow. So I think the share price does not reflect the actual value of the company, which is why I'm buying it now. So thank you guys for watching. Have a good day, and take care of yourselves.